Hey, good morning, everybody. Glad you were able to join us this morning. Hey, yesterday was a great day on Wall Street. I'm sure everybody's excited to hopefully see some follow through come through this morning. So, looking forward to my conversation with Dave. We don't have a lot in the way of earnings coming out today, but obviously we got some economic and some market news coming out that we'll talk about. Again, I want to thank you for joining us, and remember that now is as good a time as you will ever have to make sure that we don't have too much risk in your current portfolio. Give me a call and let's walk through the process to make sure that your risk number is okay. I mean, yes, we're seeing some upward movement in the market, but all it takes is one bad piece of information and we can be back down another 20 or 30% based on what we saw back in '08. So give me a call, 863-382-0037. Hey, let's just schedule a 15 or 20-minute call, 863-382-0037. Hey, I look forward to speaking with you soon. Dave will be with us here in just a second.
Point 7. Let me get my, I'm untangling a cord here. Yeah, there we go. Okay. Tangle, legitimate. My telephone was so tangled up I couldn't get it off of my wrist. Welcome to a look at finances this morning. Find out how Wall Street's treating your money. We always check in downtown to the offices of Statler Financial Services. Phillip Statler standing by today. Phillip, are we in an undisclosed location or are we at our home this morning?
We're at home this morning. We are going to buzz into the office because we have a few things we got to take care of. But for all intents and purposes, we stayed home all day yesterday. Working. We were working. Don't get me wrong. My wife says you work just as long here as you work at the office. It's like,
oh, my wife accuses me of the same thing. She got mad at me when I set up a studio at home because she said, "Now you're never gonna stop working, honey." You can't win sometimes, can you?
Yeah, some days that's true.
Setting the table for the morning, we had a banner day yesterday on Wall Street. You'd almost think nothing was wrong in the world. Dow was up 7.75%, up 1,627 points. NASDAQ was up 540 points. Even the S&P, which has been reacting more conservatively than the other indexes, up 175 points, a full 7% yesterday. I got to believe this is just a temporary euphoria as we look at a predicted peak in New York and Italy and Spain looking like they might be crossed the peak. I mean, the crisis ain't over yet, but we're just picking at straws looking for any bit of good news we can find, aren't we?
Well, I think so, Dave. I mean, I think we're seeing some optimism there in New York. And even here in the United States, I think they've seen some declines over the weekend in the number being reported. But I did see a little hot spot that Spain actually saw a bump up over the last couple of days. So there seems to be a little reignition over there in Europe in the Spain area. So something to keep an eye on, as well as here in the United States. Let's face it, we may see a little decline now, but as the president and other folks have said, this is the week that they expect some huge numbers to come out.
And the really scary part of the whole mess is, okay, fine, new cases is what we track, and I was mentioning on the radio earlier this morning that I'm kind of looking our state cases, and I'm seeing a trend maybe beginning as far as maybe we're hitting our peak as far as new cases are concerned. But that having been said, new cases now, like the president said the other day, this week could be brutal in terms of the death toll, and as we look at this thing, I'm looking at this euphoria and saying, boy, when we start getting those big numbers, even though we were forewarned, expect a few shock values this week, right?
Well, I think that, and you know, there's some economic numbers that still need to come out. And we're just now getting to the first quarter earnings numbers. You know, we haven't gotten hardly any of those yet at all. And so, you know, when those companies start reporting, not so much what happened in the first quarter, but what they think the impact's going to be in the second and third quarter, I think those things will start to have an impact on the market.
Oh, yes. Whether it's polled guidance or conservative guidance, The quarterly report itself may not mean much, but the absence or the guidance itself is going to be real telling when those reports start coming in about the middle of next week.
Yeah, and I'm seeing more and more economists having some concern over the ability of our economy to bounce back. Now, I don't necessarily share some of their views, but some of those guys are a lot smarter than I am. So, so I take it all into consideration, right? So, I believe that we'll bounce back relatively quickly, and I guess the longer we go, the less likely that is to happen.
Understood. And something it kind of addresses something that you say a lot of times as far as financial planning. You got to, you allow yourself the room to grow, but at the same time, you need to be prepared for all alternatives, don't you?
Absolutely. And, I was preaching hard during when the market was topping out that, hey, folks, you need to look at, how much risk you have in your portfolio and make sure you have enough put away in safety. My fear is that a lot of people didn't do that, and now they're paying the price for it.
I expect so. Talking about news that comes out this morning, and frankly, there isn't a lot because we're waiting for shoes to drop, both from the federal government, the coronavirus news, and everything else. One thing that really caught my eye, one of the business lines you would think would be going apey this time in this crisis would be the hospital business. Quorum Health, operator of 24 hospitals around the country, set to file Chapter 11 today. I haven't found any of the details on that. So that's one of those, slap my forehead type things. How on earth can that happen, huh?
Well, you don't know what kind of trouble they were in before. And this is going to put pressure, Dave, on hospitals because the elective surgery, which is the stuff they make their money on, that's where they really make their money, has been stopped. And so now they're having to take care of the really sick people that isn't necessarily high margin stuff like the elective surgery is. So I think that could be part of it.
Now, you got a point on that. I know that the elective surgery element is the margin stuff, and the pay rate on emergency room visits is notoriously low, simply on the grounds that if it's life or death, everybody gets into the emergency room and gets treatment. Whether or not they actually are able to pay their bill, well, that's sometimes a completely different story, isn't it?
You're right. And if somebody comes in with the virus or the flu or whatever it is, that number one, they have to treat them. And if they're not well enough to go home, if they're that bad, then they kind of have to keep them. And you're right, whether they can pay or not, there's some of that they don't have a choice. They've got to treat.
I'm just going to cross my fingers. This isn't the beginning of a trend or a sign of something in the industry. And you said very well at the beginning in reaction, we don't know what kind of challenges they had at the beginning, but a 24 hospital chain in the middle of a national health crisis declaring bankruptcy is something that definitely makes a person sit up and take notice.
Yeah, absolutely. Yeah, and again, it's. I think you have to look at where they were before. Obviously, they weren't in very good shape, and a lot of these smaller hospital chains are having financial issues because of the reimbursements from Medicare and those type of things, and insurance reimbursements have diminished over the years, and so smaller hospital chains are having issues, and that's why a lot of them are getting bought up by the big guys.
That's, the reason for the consolidation is the reimbursement rate, and to a large extent, you're right. Interesting, I'm looking at the futures this morning and looking at pre-market trading. It looks like we've got some bargain hunting going on. Looking at my big gainer stocks in the pre-markets, I've got all these companies that have just been kneecapped over the last few weeks. Norwegian Cruise Line, Carnival Line, Royal Caribbean, MGM Resorts, all these companies that have just been kneecapped over the last few weeks suddenly are on the big gainer list. It's painfully evident that at least some of the major funds are seeing some bargain opportunities out there as we look to being able to see a little bit of light at the end of the tunnel, even though we don't know whether it's a train or not.
Well, that's true. I mean, I think that's right. People are bottom surfing right now, trying to find quality stocks that they think are down on price and that will be a long-term win when it comes to this thing turning around. And I'm sure some people saw a good little bounce yesterday, and it looks like today we'll see another little bounce. But you're right. And so I think a lot of people are bottom fishing. The question is this the right time? And nobody knows. Only time's going to tell us if this is really the bottom.
Absolutely. You and I were talking before we went on the air that, okay, let's say that the bottom that we'd been mentioning last week of 2460 on the Standard & Poor's was the ultimate floor, and we tested it about 3-4 days ago, 3 or 4 trading days back. You almost never bounce off a bottom with only one test. So it doesn't mean the crisis is over. It doesn't mean the crisis is going to get worse, but it would be a surprise if we didn't test that bottom one more time.
Absolutely, it would be. I mean, it's going to be during this quarter. I suspect we'll go back and test it again. And you know, a lot of times we see these bounces like this, and it draws people back in, thinking, "Oh, hey, we're bouncing up. I don't want to miss out, right?" And so, and the problem with markets is you just don't ever know. But if you go back to the charts and look at '08, you know, we had a nice 20% rise before we had another 20 or 30% decline. So just kind of keep that in mind, folks, as you look at the market and thinking, well, you know, that FOMO, the fear of missing out, it may not be there yet.
That's true. And always good advice. If you're in one of those age classes where this is the right time to put money into the market, and somebody in their 30s and 40s with money to invest, it's a pretty darn good time to look into it. Trying to time a market bottom or a market top is pretty close to playing Russian roulette.
It is, you know, because you know, you can be off by a couple of days and you've messed up totally. So yeah, it's not good to try to time things like that. It's you need to be in it for the long haul. That's why younger folks, now's a great opportunity, because let's face it, 20 years, 30 years down the road, when they get ready to retire, this market's going to be totally different than what we see today.
Oh, yeah. Today's going to be a distant memory in 25 or 30 years, and you're going to look like a rocket scientist if you were dollar cost averaging your money in now. That, on the other hand, for the person that's only 5 years away, they're righteously nervous right now.
And they should be. If they have all of their holdings in the market, they should be nervous, Dave, because, you know, 5 years, you know, if I look back at the last 2 bear markets, 2000 and 2008, you know, it took folks 3, 4, sometimes 5 years to get back to where they started from because of the downturns. And so, you know, those folks have reason to be a little bit concerned.
Absolutely. Bottom line advice is, yes, ladies and gentlemen, the sun will come up tomorrow morning. Just sometimes the morning is a little while away, so being prepared is always a good idea. Setting the table for the morning again, it was big ups yesterday, 7% plus increases on all 3 of the major indexes. And I see green ink again this morning, 45 minutes early. What do they look like, Phillip?
Hey, we got some pretty big ups again today. You know, we got the Dow up 3.7%. That's $835. The S&P 500 is up 3.25%. That's $86. And we've got the NASDAQ up 3%, $245. So everything's really looking good this morning. A lot of green ink out there, including the other side of the coin, the commodity side. We've got silver taking a huge jump this morning, up 3.65% to $15.72 an ounce. We've got gold passed over 1,700 to 1,707 an ounce. That's up about 0.8. And we've got crude oil up almost 2% to $26.59 a barrel.
You know, those guys that were saying, hey, it might cross $2,000 on gold on the talk show stations, starting to look kind of smart. They were saying that, though, well, it was wallowing at 1,200 on gold, weren't they?
Yeah, you know, and so sometimes it takes a little while to get there, right?
And one good scare can really help the price go up, can it?
Yeah, it can, especially when you're talking about gold and silver.
True. Overseas markets this morning, all green ink. Asian rim markets closed up 2% and better up. Both Britain and Germany are up surprisingly. Great Britain's markets are up 2.5%, even with their prime minister in an intensive care ward. So they aren't really worried about that too much this morning either. Phillip, there's a lot of ways to reach out, even during a time of social distancing and stay-at-home orders. How do I find you to help get some advice to stabilize my retirement?
Dave, for folks that are really concerned about what the markets are doing and that type of thing and their retirement, hey, call us and just schedule a 15-minute phone call. You know, 15, 20 minutes, we can talk about what you got going on and see if there's some things we might be able to help you with. Call us at 863-382-0037. That's 863-382-0037. Follow us on Facebook. We post stuff every day. Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. to noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730. And let me just tease Dave, we'll have a special guest on this weekend, a doctor from Johns Hopkins University.
Cool. I have to listen to that one all the way through. That's twice on Saturday and once on Sunday for the Statler Financial Radio Show on News Talk 730. Phillip, I'll catch you tomorrow morning, all right?
All right, man. You have a great day, and I'll talk to you tomorrow.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that first page.
Hey, folks, again, I want to thank you for joining us today. I hope that your day's off to a great start. And join us tomorrow as we bring in our next report with Dave. Have a great day, and I look forward to speaking to you tomorrow.